Good morning, everyone, and welcome to the European crossover webinar. And we've seen data just come in right now with Italian confidence coming in at 98.8. Reuters poll was supposed to be for 100, so just a little bit weaker. That was for business confidence, and consumer confidence came in at 112.2 with Reuters poll at 112.6. So pretty much that part in line. At the top of this next hour will be Italian producer prices, and then also economic sentiment for the Eurozone, as well as business climate and consumer confidence. But that'll be a final reading there. As we further come into the States, we'll have personal income and spending at 8:30 Eastern, with core PCE also at 8:30, and durable goods. Also, we do get a final University of Michigan reading at 10 a.m. Eastern. And let's move this out of the way. Now, we have seen the cable continue to weaken and to come even past our level here. It made it all the way down to 2270. Actually had decent volume coming in right here, so maybe find a little bit of a bid here, which is just going to be this 2270. Euro in itself has continued to remain weak here, moving to newer lows in Asia, as low as 1905. Dollar CAD still stuck in its range. And the cash dollar index on here, we had been looking at 99.29 yesterday. We made it to 99.28. That was yesterday, and then today we've made it so far as 99.31. We did push up the potential to a little bit higher in case we do see a further rush into the dollar, but we'll talk about that in a little while. One thing that is interesting is the dollar yen's keeping up its bid, and I think you have to go and keep an eye on this. Obviously, we'll see what happens with the dollar index. Obviously, that's going to go on and keep the bid on here, but looking on the 2-hour chart, almost appears to be almost like an inverse head and shoulders. But keep an eye on this. If we do see further bids in the dollar, we can end up pushing this dollar yen higher. Taking a look here at the cross rates, Aussie yen continues to be mired in mediocrity. Look, we're just not even moving. I mean, if you look at this, you'd probably think this is maybe like a 5-minute chart, maybe. This is 2-hour charts, and look at that. We are just simply not even moving. We have seen the guppy move in lower. Now, we've actually come into, which would have been yesterday's bias chart support. You can see that here. Right there, and kind of find a little bit of support off of that area. But we had a decent little shift lower, those highs. Euro yen also tugging its lows, but holding just above that bias chart support of yesterday. And with the Euro Kiwi, honestly, I'm a little bit surprised that it didn't even move even lower. So it's kind of holding its own, attempting to hold its own right there. Including with the Euro Aussie. So you can see here, see this pattern here, look at the Euro Aussie, the Euro Kiwi, the Euro Yen, all holding here pretty close, for yesterday's bias chart, even though we've seen the Euro dollar continue to move lower, but kind of seeing a little bit of a interesting hold here for the Euro. We'll see if that matriculates into the US session on the Euro versus the dollar. And gold has finally cracked the 1500 here on the spot. On the spot. Probably translates to about 1507 here in the D's futures. And oil is interesting. We made that run yesterday. I mean, we took that dip, and it looked like it may be able to hold that area. Look here, it's just been stayed. We haven't seen much of a bounce. We kind of made a attempt to try to hold here, but certainly nothing to go and right home by. Look at that. And S&P is just kind of hanging in there. With that, we'll roll into the news and then get into the bias chart analysis. So as far as the cable, it says the pound returns to the fray after court verdict respite. Fading hopes that Tuesday's UK Supreme Court verdict quashing PM Johnson's suspension of Parliament marked up a big step back from a no-deal Brexit, have seen the pound's gains dissolve as investors prepare for yet more uncertainty. For the first 24 hours after the court ruled Johnson had acted unlawfully in proroguing Parliament, Sterling rallied. But a vitriolic parliamentary session on Wednesday made clear that the political deadlock over Brexit is far from broken, heralding a difficult few months for the pound and the British assets. For some money managers, such as Caspar Hentz, portfolio manager of Blue Bay Asset Management, the court verdict is nevertheless a reason to stick with the bullish pound conviction. Obviously, he's been wrong. He dissed his long-held bear stance on the British currency at the end of August. Well, he's on the opposite side. We think the probability of a no deal has fallen even further, Hentz said, predicting the pound would strengthen to 85 pence against the euro before there's a general election. It was trading at 88.8 pence on Friday. Betting markets support Hentz's view and increasingly doubt Brexit will happen at all next month. Odds on Johnson's managing to strike a deal with Brussels are now at 5-1 compared with 7-2 last week. On the other hand, action of the pound buffeted for the 3 years by Brexit news implies that even in a no-deal scenario is averted, the path towards that outcome will be rocky. Having risen from 5% from a 3-year low below 120 to 125.82 last week and popping up half cent on the Supreme Court ruling, the pound slipped back towards 123 on Thursday. The ruling increased confidence in UK assets, but the prospect of a general election potential Corbyn government would unsettle things anew, said Roy McPherson. Second is a general election by year-end. Opinion polls put Johnson's Conservatives in the lead. To believe the no-deal Brexit will be successfully voted, the anti-Brexit votes have to win the general election where it happens. There's simply no way of knowing that. So enough of that. Let's go on and quickly move into the dollar. Dollar softens as dealers await trade news. The dollar softened on Friday, drifting from multi-week highs against some major currencies as investors cautiously weighed fresh political turmoil in the U.S. and waited for the next upturn in negotiations with China. The greenback was marginally weak against the safe haven yen. It fell against the trade sense of Australia and New Zealand dollars, which gently rallied on hopes. A one-word description of the currency markets today is morbid, said market strategist Michael McCarthy. I think what some traders are responding is to as a lack of the news is becoming apparent that a U.S.-China trade deal is to be done here. China's diplomats said China was willing to buy more U.S. products. The pound edged higher to 23.30, having hit a 2-week low A whistleblower report released on Thursday said Trump not only abused his office in attempting to solicit Ukraine interference, but the White House tried to lock down the evidence about it. The dollar index measures the greenback is on track for its best week in a month. Australian dollar rose to 67.58, but gains were capped as traders wait for a central bank meeting next Tuesday, where the RBA is widely expected to cut rates. Okay, bear with me. My alternate speaker was buzzing, so hang on. Okay, looking to the euro, it says the euro is selling off to new lows as the week comes to an end. The pair is at Thursday's initial buy support. This was during Asia at 920, with a secondary coming in at 889. So that's going to be our buy chart support for today. It's going to be 889. And on the upside, if you can call it upside, would be this 966. And they've had some trouble. You can know that, at the time during at the beginning of the week, that was a key level, the 966. At the beginning of the week, you can see that here. We rallied back up here, and as we got below it, we rallied up to 66. We came back, we rallied up again to challenge it, took it out by 2 pips, fell back again. So it's pretty clear that would be our resistance, 966. Okay, and on to the cable. Cable attempted to find support at the 38% back at 23.45, but it's susceptible to a move to 22.88 with the dollar on the bid. So our low was 22.71 or 22.72. So we're saying 22.88. You can see where we came with that with these touches here. Let's take a look here on the 2-hour chart. They've actually come right down to the 50%. Look at that. Right down, holy smokes, right exactly, and tick this 50% here. So we'll go with that for support, 2271, that 50% pullback. We had the coming in here, well, there's your 2288, but came in, ticked off on this 2271, 50%. And resistance at this point is going to be right there. Right there. 2345 for resistance. Okay, as with the dollar CAD, we continue to be mired in this mediocrity, and we'll get to that. And in the analysis I put, there's no change for the dollar CAD as the pair is stuck in neutral, spinning the tires. The pair has been limited to a 70 pip trading range all week long. Bulls need a daily close above 33.36 and a break of 32 even does send the pair down to 31 even likely. Yeah, that is true. Which here's the 32, here's the 33.36 way up here. We need to close, but we're just trapped in this range. So it's just the range at this point, which is going to be 33.07. And 32.24. Now the breaks are going to be 32 even and 33.36, but we're just this is what we're trading within. You could almost tighten it up even further at this point and make it even 32.40 to 32.85, but this is what we're looking at here. So let's go move into the Aussie. The Aussie's key support level, 67.42, may fall as early as Friday, opening a test to 66.97. Initial resistance is 67.80. Well, we're trying to hold here. We actually have that support's been just below that at 67.34. And until it falls, I guess we'll just keep it there, but that's what's just barely, it's just holding just above that. So we'll put that, although if we do break below that, we're looking potentially for a move to 66.97. But we'll retain this. And then on the upside, well, this is the key, is the 68.30, 68.31. Let's see if we can just, let's go back. There's going to be 68.01 on the short haul. And moving to the Kiwi. It says the Kiwi is teetering on support level 62.88. A break of 62.55 will send the pair to 62.08 with the potential to 60.72. So for now, it's pretty clear. I mean, it's this level that's been sitting there since last Friday. And we'll put that as our support level, which is key, 62.55. And on the upside, yeah, 63.24. Let's take a look on this 2-hour. Well, that'll still remain the same, 63.24. So right there. With that, let's go move into the peso. It says the dollar peso secured a daily close above 1960, opening up the opportunity for the next leg up. Initial resistance is 1972 with the potential push to 1982. Support is 1954. So you can see that here. It's going to be 1972 on the upside. I think we have that. Hang on. Right there. We did get that daily close above 1960, which turned things around. And it's going to be 1954 on the downside. And let's go move into the dollar yen. In this analysis, I'm doing the basic technical during the Asian session. So it's kind of like get a little jump on European trading, but at least you can check in there. And so obviously things can change a little bit from Asia to Europe, but it's done. I do it in the evenings just so that we'll have that one step ahead if you're available in Asia, okay? So let's go and look at the dollar yen. It says that the dollar yen retains a bid, having challenged resistance level 788. We can see that here. Beware of continued dollar strength as the week comes to a close. Secondary resistance is 808 and support is 740. So we're going to go with the 808, but bear with me. And support's going to be 740. Oh, there's 739. That's fine here. But here's what you got to look on. You see here when we did this one, I remember sharing this and I said, this looks potentially like a head and shoulders, although this right shoulder never came up that close. And we did go and break. But look at it now on the 2-hour chart. Almost looks potentially like an inverse head and shoulders. And it has been after a fall. Now, the thing that you have to be a little bit concerned about is that as we go into the end of the week, we may see further moves into the dollar, and this could push even further. Now, I went with the initial secondary support, which is going to come up there, right there at 808. But just be careful with this pair. Just be careful. I mean, it does look like an inverted head and shoulders. With that, we'll move into the cash dollar index. Now, yesterday we had this 99.29 that held the market in check here. Let's see what happens today. Says the dollar index resistance held 99.29. Now, I was talking about yesterday because I do this analysis in Asia, and I had 99.29. The high was 28 with 10 big. Now we're popping up, but now we're pulling back a bit. The dollar index resistance held 99.29, but the buck remains on a tear. Resistance for Friday is now 99.41, followed by 99.81. Support is 98.84. So let's go and mark off the dollar index resistance. This was from yesterday, and we got up as high as 28. And support's going to be 98.84. Let's go and move into the cross rates. So we're trapped in this range here with the Kiwi yen. We're simply not going anywhere here. It's almost as bad as the dollar CAD. So no changes here in the Kiwi yen. I mean, look at that. We're not going anywhere. So you got 67.58 on the downside and 68.11 on the upside. You see here? And we're just still within this range. We're not going anywhere. We're just spinning our wheels. And it definitely is bearish. I mean, we're still in this lower end. So from there, we're going to move into the euro yen. Now, here's the interesting thing about the euro in itself is, we're kind of holding these lows against the dollar, although it's moved lower. But when you look at some of the other cross rates, look here against the euro yen, it hasn't really broken to lower. If anything, it's working the other direction. You see what I'm saying? So this is going to remain the same here on the euro yen. No changes whatsoever here, which obviously on the downside, it is holding. Which is going to be 17.59. You can see that here. And the upside, if we are able to push up a little bit higher, the real resistance will come in right there at 18.20. So no changes here on the euro yen. We'll see a little bit of divergence, but once again, it's still at this lower end. And this looks like about a 50% or near 50% pullback. Let's go and take a look at that. Actually, 61% pullback. Wow, almost to the pip. Interesting here. Let's move into the euro odd. Same thing here. Unlike the euro dollar, which continues to break lower, we're seeing a little bit of divergence here against some of these other cross rates, albeit the euro yen, the euro Aussie, um, the euro Kiwi. So here we're trying to make a stand. So no changes here. I'm going to keep that the same here on the downside, which is 61.50. And the upside, can be right there, 62.23. We'll move in here to the euro Kiwi. I thought we might have even been able to break a little bit further, although this was a disappointment after the RBNZ. I think people were seeing more of a dramatic pullback. But once again, we're kind of holding here. So we're just going to move this just a tad bit lower, but not a whole lot lower here. You can see here, but we're holding our own here. So the support's going to be 73.15 on the downside. Upside's just going to be just a hair lower right there. 74.24. But you can see here, the market does look a little bit tired out here. You see that? It won't take much for this to jump right up there to that 74.24. Now, one pair that's really stuck in the mud is this Aussie yen. This is absolutely going nowhere. This is just unbelievable. I mean, if you look at this, you'd think you'd be looking at, seriously, a 5-minute chart. And even if that, and this is unbelievable to think these are 2-hour bars, and we are just mired in absolute mediocrity. We're going to move this up to 72. Well, just right there, 72.32 for support. And resistance is going to be right there, 73.30. Let's go on to the guppy. This has had a nice pullback after reaching up in here. We'll take a look at the daily. So we have implemented all the way up to the 38% came up here close to 36, and since then it's been down, down, down. But we're coming up to this level here, 32.26. We're going to mark that as our bias chart support here. It's going to have to remain here. Even though it seems a bit distant, but this is where the real resistance would come in, which is going to be that 33.60. Right there, change. And we'll wrap up with starting odd. Well, as the starting odd comes back to earth, let's go and take a look at this on the fib. You can see the 38% comes in at 81.42. Yeah, we can even a little bit lower than that. Right there, 81.18. Let's go with 81. 81.12. And the resistance will be 82.78. Well, we've seen gold come off quite a bit. When we saw that tumultuous fall day before yesterday, I thought if we can rally back up to 38%, that would provide a good opportunity for shorts to be placed. It came up short of that. And that would have translated to about, I think it was 15.22, 15.23 in the futures. It did not make it up. It came close. I mean, you're looking here, probably came up to about 15.19 in the futures. I was looking at that. If they got up to 15.22, it'd be a good area to go and put on shorts. It came up short of that. And then hence since we've gone and fallen even below 15 here. This is interesting. Because this is important here. This is where they broke out. This could actually open the door for them to come all the way down to 1485, which would be 1492 in the futures. Certainly, as we finish the weekend, if we see further dollar strength, this will generate. Although we've already knocked quite a few people out here. Potentially, we can fall another $8. Now, overall, we can come down to 1485 in the spot, but for today, we can drop another $8 if we see this dollar trying to push even further. But it really knocks out the bulls at this point. I mean, because we'll have broken out, and if we lose this 1500, it really negates this, and then turns out look like a fake out here. I wouldn't necessarily call it fake out. It was just, I think that's wrong because technically this thing did go and break. Okay, things just turned around. The dollar turned around. You know what I mean? So I don't think someone would have say, "Oh, well, this was just a fake out." It was just a fake. No, it wasn't. We broke below this trend, broke this downtrend line, and we rallied. And now, if you're saying what happened above 1529, well, obviously the dollar changed things. But that being said, now you can say, but to say now, oh, this was just a fake out, that is absolutely incorrect. It is. Did it break this downtrend line? Yeah, it sure did. And then the exponential moving averages. Now, did we break this trend line and rally $10 and then fail? No, we broke this and rallied $36. So don't tell me this was some fake out. So it wasn't. But once again, because I'm saying is we can see this market then come back. And people are probably going to question this move. Well, yeah, there were mitigating circumstances. That being, i.e., the biggest story of the year that's only been the dollar. Okay, so yeah, that turned things around, yeah, it'll have negated this move. If you were to say now, if you'd say, oh well, that was a false break above 1529. Well, it did get above 1529. It dipped back in hell. That'd be one thing. But to say this most recent move was just a fake out, that would be absolutely 100% incorrect. So, but I think the potential is there for us to move down here to 1485 on the spot, which should be like 1492 in the futures. Doesn't mean we can't eventually even work a little bit lower. Depends on what's going to happen with the dollar. It really does. But we shall see. Looking here in crude oil. This has been interesting. And I think probably why the market's having trouble here. As I mentioned, I felt bearish during the week. Not that I traded it great. Oh, man, I was just short. No. But I'm saying is I felt that it had a bearish tilt because of when you look at, well, we had the drone attacks. And I'm just covering this from a little bit, I wouldn't call it a macro perspective, but it's the end of the week. So we had the drone attacks, but then they said, oh, well, they're going to come on very quick. No, then they came out and said, no, they're going to come on even quicker. And then on top of that, we've had the weakness across the globe with purchasing managers indexes and other consumer confidences. German figures the worst in since the financial crisis. Not that moves the markets, particularly in oil, but I'm just saying it's just one more thing just being thrown onto a negative economic outlook. So I'm saying, well, God, this thing's probably just going to go lower. That being said, this is a pretty good level down here. And that's what I thought 2 days ago. I said, wow, this is a pretty good area here for peeps that were short, medium term for them to cover. And then we rallied up and we failed and we came in yesterday. Okay, well then, wow. Then they'll have taken out these lows, confluencing with this trend line and also this 61% back. And I'm thinking this thing was going to take off like gangbusters. I mean, to the point that I basically ignored these other markets, which just goes to show you, I mean, I can certainly make mistakes like the next best character or whatever, because I did it to the detriment of ignoring the move that we saw in gold. And we saw a nice move in gold as nice activity up and down. Didn't really do much with equities. I mean, not that I've been doing that much lately, but I mean, other than the one play I had that I mentioned from 2 days back, if we got above that 29.85, but pretty much everything, ignored everything because I was so hell-bent sure that we were going to see on this dip here, oh man, this is it right here. They're going to come down here and they're just going to shoot up. Yeah, right. That is not what happened. You know what I mean? So it's kind of now in the Asian session, it finally popped towards the end. I wouldn't call it pop. It just moved higher. But then we slid back and now we're kind of working a little bit higher. And I think it really, although crude can be a very tough market to trade, although it's mainly all technicals, I think this has a lot to say with what the market's trying to balance things out. Like, yeah, we did rally, but things are weaker overall. Yes, the Saudis are coming back online. Yes, we're coming to some technical levels at great confluence, but the market is just, it's not making any lows, but it's not taking off like gangbusters, which probably suggests that we could even move even lower. But the market's really kind of scratching its head on what to do here. But that's about it. That's all we have. But thanks for joining us here on the last day of the week, European crossover, and have a great rest of the day trading.